Vukile says 2025 has been a transformative year for the property group. That's as its focused growth strategy plays out. During the period, the firm's South African portfolio reported like-for-like retail net operating income growth of 6.4%, with retail vacancies lower to 1.7%. In Spain and Portugal, the company has reported portfolio occupancy of 98.4% and positive rental reversions of 17.3%. This performance helped to lift headline earnings per share by 20.7%, while funds from operations amounted to 158.8 cents. A final dividend of 76.5 cents per share has been declared. That's up 6% and within guidance. Vukile says the corporate activity during the year has laid a strong foundation for continued growth. And so in 2026, the group expects to deliver an increase in funds from operations and dividend per share of at least 8%. It's been 10 years since Stor-age listed, and looking back on this, the Real Estate Investment Trust says it's delivered a decade of consistent performance and significant portfolio growth. The commentary comes alongside the release of the group's annual results. During the year, distributable income per share rose 4%. Looking ahead, Stor-age expects a favorable environment in South Africa thanks to an improved inflation outlook, a stabilizing political climate and recent interest rate cuts, while in the UK it believes the self-storage sector will remain resilient. Given this, the firm is forecasting distributable income per share growth of between 5 and 6% in 2026. The South African Revenue Service is pursuing Astron for 2.7 billion rand. The tax agency says the Glencore-owned company is liable for unpaid excise duties and levies. The firm disputes the claim and is fighting tooth and nail to show legal course on why it has not shortchanged the fiscus. SARS's internal processes have been exhausted, and so the matter is now likely to be resolved by the courts. Lewis is battling its insurers over a multi-million rand business interruption claim that's linked to the breakout of COVID-19 5 years ago. The furniture major has claimed an amount not exceeding 1 million rand for each of its 628 stores, which were affected by lockdown. But its insurers have tendered up to 1 million rand for losses sustained by the group as a whole. The parties' interpretation of the policy is at the heart of the dispute and is set to be resolved via arbitration. Eastern Platinum has become the latest JSE-listed miner to experience a cybersecurity incident affecting its internal IT systems. The company says the attack took place on the 27th of May and has stated that certain files related to its internal affairs were disclosed as a result. East Plat is working with cybersecurity experts to thoroughly investigate the incident and take remedial action. This comes just a few months after Wesizwe Platinum also reported a cyber attack on its operations, which exposed its finance, legal, procurement, and human resources functions. Confidence across South Africa's agricultural economy eased slightly in the second quarter. That's according to the AgBiz IDC Agribusiness Confidence Index, which slipped 5 points to a reading of 65. Those surveyed pointed to fraught geopolitics, an uncertain trade environment, and lingering animal disease outbreaks as the main downdrafts. Better summer rains and improvements at the ports helped keep spirits high enough to prevent a steeper fall. In international company news, OpenAI executives have considered accusing Microsoft, the company's major backer, of anti-competitive behavior in their partnership. This potential move might entail a federal review of their partnership and a public awareness campaign. Here's more detail.
OpenAI's close relationship with Microsoft could turn sour. The Wall Street Journal says the ChatGPT maker has considered accusing the tech titan of anti-competitive behavior. It says the move could involve seeking a federal review of the ties between the two and a public campaign over the matter. OpenAI needs Microsoft's blessing to complete its transition to a public benefit corporation, but months of talks between the pair have failed to produce agreement. Among the sticking points is said to be the future stake that Microsoft would hold. Tech publication The Information says OpenAI wants the Windows maker to get a 33% share in a restructured unit, in exchange for foregoing rights to future profits. It reportedly also wants to modify clauses that give Microsoft exclusive rights to host OpenAI models in its cloud. The Information says neither issue has yet been settled. Microsoft invested an initial $1 billion in OpenAI back in 2019, but the chatbot maker has since been looking for ways to reduce its reliance on the tech heavyweight. Earlier this month, Reuters reported that Sam Altman's firm plans to start using cloud services from Alphabet to boost its computing power.
And Luca De Meo's abrupt departure as Renault CEO has kicked off a search for his successor, with analysts mentioning longtime insider Denis Lavot and Maxime Pichot of rival Stellantis as suitable fits to continue the French automaker's turnaround. Here's more detail in this package report.
Renault is beginning the search for a new boss. That's after current chief executive Luca De Meo agreed to make a surprise move to Gucci owner Kering. He's due to be gone by mid-July. The news sparked a tumble for Renault shares on Monday, with De Meo credited for turning round the firm's fortunes. Now analysts say possible successors include Stellantis executive Maxime Pichot, who lost out in a bid to land the top job there. Renault insider Denis Lavot is considered another strong contender, having run the firm's thriving budget brand Dacia. Whoever takes over, they'll have to hit the ground running. Though Renault revived under De Meo's leadership, it's smaller than many rivals. And it faces the same challenge as its European peers from the rise of Chinese brands. Meanwhile, De Meo will face no shortage of challenges in his new job. Kering has been battling mounting debts and flagging sales at its star brand Gucci. Its shares are down around 75% over the past 4 years. And one investor said its swoop for De Meo, known as a turnaround expert, could mean the problems go deeper than outsiders know. Industry players told Reuters the betting is that he'll first push for cost cuts, including store closures and redundancies. One source said De Meo's learning curve would be, quote, super steep, given his lack of experience in the luxury sector.